if probably people might not even understand what you are trying to say, please reach out to the person in charge, the person taking you. Reach out to the person, talk to the person, so the person is going to know how to present it. I mean, it does not make sense for 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 us to be arguing forth and back on something that does not add up. Some were even saying, should I paid now? Like, it's just, I don't want to go deep into that. But nevertheless, we are here to help. So we are just going to anchor the class. So I how do I say it? So I actually spent a lot of time yesterday to deal with all these things, so that at least I explained yesterday that chapter review. No, not yesterday. Actually, from last week or the beginning of our class, revision class, I said that from experience, I can use to test from chapter 5 to chapter 14. But however, there is a disclaimer there. Disclaimer is, don't put all your trust in it that, oh, maybe the person taking us said that it's going to be from that chapter 15 to 5 to 14, and you neglect from chapter 1 to 4. Eventually, some major question mark comes from that 1 to 4. You now say that, oh, it's this guy that make you to fail. Disclaimer, please read through all the whole chapter. But however, from experience, these are the chapter that I can use to test very well. So that's why I do the syllabus overview, the way, the syllabus grid and way. Please confirm with your emoji if you can hear me, so that I will continue. It's not like I'm just talking to myself. Okay, thank you. So let me increase the volume. So this is what we are going to be doing. Every 15 minutes, I'm going to leave the class open so that everybody can contribute. Then let's start with something else. So if we start, we are going to go far about it. Okay, let me see if I can open this. Okay, so according to the to what we have here, so we said we have the syllabus and the way syllabus. So I want to explicitly explain the way of this from our chapter 1 to chapter 16, as the case may be, so that we are familiar with the weight of each topics or each chapter on our exam. So the first one is laws and regulation. Please confirm with MAG if you can hear me, and so that I can proceed. Please, if you are not hearing me, please, it's as if it seems that is your network. Maybe you log out and log in, because people are confirming that they can hear me very well. So if you can't hear me, I think it's your network. So let's proceed. So we said that we have syllabus grid and the syllabus weight. The first one is the syllabus grid. The syllabus grid has to do with all the topics, and the syllabus will have to do with the percentage of how they are going to test those things in our exam. So that is the difference between the two. That's the difference between the two. So first of all, we have a law and regulations. First of all, we have laws and regulation of audit and assurance engagement. So this one cover from chapter 1 to chapter 4, the laws and regulation of audit engagement. Under this, we are expected to know the meaning of our audit and assurance. Then we move to all the laws and regulations govern the audit and assurance engagement, and also the financial statement of an organization. Then also talk about the ethical behavior, the professional ethics behavior, where we have our integrity, objectivity, and the likes. I'm sure everybody knows about that. Then again, we also talk about the auditor's liability. The auditor's liability has to do with the the circumstances whereby the auditor is sue and be sued by an organization or a client for negligence on what he or she is supposed to do that cause issue on the financial statement, probably make an investor to lose his or her money. So if that thing happen, it is called auditor's liability, and you can be sued. It can be civil law or criminal law. So these four chapters are encompassed in the laws and regulation of audit and assurance, and it covers 20% of our exam out of 100. Then the second one is the acceptance of professional engagement and managing of assignment. Then this one have to do with our audit engagement, that is the what we need to do before we accept a professional engagement. This one talks about from chapter 5 to chapter 6, which is the audit approach. Then the practice management, what we can do to have a seamless audit tenure. Then that one covers 15 marks, which is just from chapter 5 to chapter 6 to 7. Then the other one is planning and undertaking audit work. This one has to do with our audit planning, which is chapter 7. Then undertaking the audit work has to do with the audit evidence, which is chapter 8. Then the chapter 9 has to do with what is that chapter 9? Has to do with oh, so I think everything is here. Just want to get through that chapter 9. I used to forget that chapter 9 very well. Okay, thank you. Chapter 9 is evaluation and review. Yes. So this aspect now talk with our audit evidence, then the audit planning, then our audit evaluation and review. All these things are encompassing from chapter 8 to chapter 9, chapter 7, 8, and 9. And these are the heart of our exam, especially that chapter 8. The audit evidence is the largest aspect of our exam. Then we said the chapter that covered that aspect is chapter 7, which is the audit planning, chapter 8, the audit evidence, chapter 9 is the evaluation and review of our audit evidence. Then this one covers 30% of our exam. So moving on to the drawing conclusion and reporting, this one has to do with our audit report. The audit report is the second largest aspect of our exam that they use to test us very, very well. So we need to understand this very well, that it has to do with audit reporting, the group audit or joint audit, the internal control and outsourcing, which is chapter 13. Chapter 10 has to do with group audit or joint audit. Chapter 11 has to do with assurance engagement also. Yes, assurance engagement or assurance services, as the case may be. Then chapter 13 has to do with internal control and outsourcing. Then also we now go to audit reporting. So this aspect also cover 25% of our exam, meaning that from that chapter 7 and to chapter 14 carries a lot of information that we cannot afford to joke about. Then again, the application of information and technology, this aspect has to talk with the use of technology in our audit environment, like the COVID, the cards that we are used to. That those are the applications that can actually help us simulate streamline our audit work to be very, very simple. These are these software that can prepare financial statements, like the one where we are currently using in our office, and even before they are using the caseware in all departments to prepare. So then we need to. So those are the things that we see under that chapter, and it carries 10% of our exam. The reason why I did this is just to help us, because what I'm getting that people are actually expecting a lot from this revision class, that they are actually expecting us to start from word by word, figures by figure. Actually, it is. Please confirm if you can hear me. Some people are saying my network is breaking. Please, if you can hear me, please let me. So it's probably your network, ma. Please check. You can check your network very well. So this is the reason. That's why the reason why I did this, because people are saying that like they are expecting word to word, figures to figure, and I have to tell them that some even told me that the expectation of this class have not been met. So I was not trying, like what we discussed in the class, especially maybe it's Mrs. Suliyat, I can't remember again, that people are actually expecting that I should be doing from word to word, figures to figure when they are comparing the AA class to other class. So I want to correct our impression about that. Actually, this audit and assurance goes beyond what we see in our study pack. It has to do with our understanding on that topic. I said, when they ask you what is audit documentation, I think by ISA 230, it defines audit documentation, the way in which how to document our audit evidence so as to form an opinion. So that audit documentation they can actually set 30-mark question on it. So what you need to do is to go through that audit documentation. Just think of, these are the a standard way, as if, okay, I have all those evidence now that I have gathered from my clients. How do I document them for it to serve as reference for people that will use it in the future? That is where all this working paper comes in. So we need to understand this topic. You know, what they are putting in our solution, you are saying at that back of Pathfinder, it is suggested solution. They might also be wrong sometimes. So what you need to do is to understand that topic very, very well. That is why you have, I know that the study pack will be very, very big and ambiguous for us. That is why we have summarized notes for you to read and understand the meaning of it. Then as a professional, you now be the one to now translate it. You add spice to it to make it more meaningful. At least when they ask you about it, it's not that you are just going to write one page and leave it like that. So if they ask you about all this documentation, as timeless as that definition is, think outside the box. What can I do to convince this examiner that I actually know what they're asking me? You make reference to the ISA that talk about it. If you remember, then you write as much as you can, maybe like 3 or 4 pages on only on all the documentation. You think about many things you really need to talk about, so that to convince the examiner. Like I said, this audit and assurance has gone beyond just what you see in the Pathfinder or what you see in the study pack. They actually expect you, because audit has to do with real life work. Forget about those this thing. Audit is the most complex one. That is why people find it difficult to pass, because if it is corporate reporting, you are dealing with financial information, that is figure they give you. How can, okay, what does the standard say about this? How do you substantiate that? Okay, they said the revenue is 15,000 naira. You post revenue of parent and subsidiary, you merge it together. If you are doing consolidation, you put it there. That is this thing for you. Your answer cannot be different from what they put in the Pathfinder and in the Pathfinder answer. That is all those calculations. But this audit you are seeing, it is real life situation. Like The company has prepared the financial statement. I'm going there to audit them, at least to verify what you put in that financial statement, if it is correct. So it's good. It's more or less like you are in a real life situation. Like, I'm going to audit your account now. If I want to audit revenue, or if I want to audit expenses, for example, I have my lead schedule of based on my materiality. I have my lead schedule, the materiality. Okay, this is what I'm going to pick. You pick them, then you send sample. All these things are inside chapter 18, chapter 8, audit evidence. That's where you pick samples. Your materiality is there. So there are all those things. It's just like a guideline. Now, when you get to the field, what are you going to do as an auditor to make your audit work more simple? So if you did not understand that audit and assurance is a spiritual course, that it does not relate to all those word to word, figures to figures. I'm inside advanced tax and assurance, where people will just be sending, okay, is this allowable expenses? 50,000 naira, put it there. It's not like that in audit and assurance. So you need to be like the situation, the problem is standing in front of you like this. As an auditor, I want to be the one to give solution to that problem, standing in front of you, not forget what you see as seeing in the book or in the picture. So if you understand that, if you put that in your mind, oh subhanallah, you can use this network. So if you put that in your mind, you will now understand what you need to do and what you need to say to have a very good score point in your exam. So please, I hope I am communicating. I hope you understand the basis of where I'm talking from, so that people that are just there, they will not just be saying that this thing is not met, because they're actually expecting. Even as at now, we are not even expected to treat past question. We are just here to tell ourselves this is how you are going to relate to this question. That is why I took my time. That is why I took my time to do this chapter review. However, this chapter review goes beyond this thing. There's a disclaimer there. Disclaimer is, please also read from chapter 1 to 4. But I did the chapter review from chapter 5 to chapter 14 to help us. I will be reviewing it, then we'll be talking about it. Then after the each chapter, we are going to now see what we can do about it. So let's dive into the situation. Please, can you see my screen, please? Anybody? Can you please see my screen? Is my screen moving? Okay. So let me just unload the chat box to entertain some questions. Please, if you have a question, please just raise up your hand. I'm just going to call you before we dive into the chapter review proper. Thank you. Okay. So who is want to ask us question? Any question? Okay, Mrs. Ruth, do you have a question for us? You can unmute now and talk. Okay, Mrs. Suliyat, please. You raise up your hand. Let's hear you if you are there. Let's hear you for this period.
Yes, I'm here.
Sorry? Please, oh yeah, now let's go. The time is going. Oh yeah.
Anyways, I only raised up my hand for that question before the lecture ends. So not now. I don't have any question for now.
In advance, Abby?
Yeah, just in advance.
Okay, so okay, thank you. Noted. Mrs. Kyra, please. Let's hear you. You raise up your hand.
Yes, sir. Good evening, sir. So please, sir, I want you to kindly explain emphasis of matter paragraph and other matters paragraph. Can you explain on that?
Now.
Okay, that's what
we are going there.
Okay, sir.
That one is under our audit report. And if it's interesting to know, it has to do with when company is going concern assumption. That is where you as an auditor, you have a doubt that this company is not going to be in existence for a very long time because of what happened. Because over the years, the company has been making repeated loss. So it is important, maybe like 3 years the three financial statements back, the company has been making loss, and the current audit, the company also make loss, it is important for you as an auditor to put that paragraph in your auditor's report for the management to know that there is going concern assumption. That is why that paragraph has come to stay. Please, do you understand now? But we are still coming there.
Yes, sir.
I
I
think
do.
I have
Thank
a
you very
question
much.
now, please. I think I have a question now, please.
Hello?
I said I think I have a question now. That's why I raised my hand over. Okay, please.
Okay, oh yeah, go ahead.
When we reach, thank you. When we reach audit evidence, please, that part of it they will put plenty financial
Okay.
statements, and they will ask us IS16, blah blah blah. Please, you can help us like lay emphasis on it, please.
Okay.
That's
Okay.
thank you.
No wahala. All right. So thank you. Then who else? Mrs. Ruth, if you don't have any question, you please kindly put down your hand, please, so that we know the people that are asking question. Mrs. Ruth, are you there, please? Thank you. Okay, so let me unlock the class back so that I can continue the class. So thank God we are able to start. So let's start and dive into the matter at hand. Okay. Sorry, I have to just want to try and open something here so that I can. Okay, so what do we need to do now? Okay, chapter 4, 5. Okay. Okay, mashallah. Let's start. So now we want to talk about, please confirm if you can hear me very well so that with your emoji so that I can proceed. Thank you. Okay, now, so we want to start with chapter 5, chapter review on chapter 5, which is practice management. Practice management. What do you understand by practice management? So practice management in audit is nothing other than has to do with the method and procedure adopted by that firm or an individual to have a seamless audit audit tenure. That is, to have a very good audit tenure, in the sense that what are the things, the procedure we put in place as an audit firm to have a very good audit exercise, in order not to have anything that will make us to express wrong opinion to our client. So this is just like, I want to do something now. What are that procedure, that thing, that quality that I want to put in place for me to have excellent results in my exam? That is the essence of this chapter. We call it practice management. That is the quality control in audit of financial statement. That is the quality we put in place as an audit firm or as an individual auditor to have a very good audit exercise, and also to reduce the risk of expressing what incorrect opinion. So this chapter is also very, very important because it helps us to reduce the risk of expressing wrong opinion, and also is going to help an organization to reduce the auditor's liability. That is, if you did not issue wrong opinion, you are not going to be liable for any law of tort where they are going to sue you for any criminal or civil law. Then you are going to, but it's going to help your organization to gain more weight, in the sense that when people know your organization that, oh, you are good at what you do, the company is just very, very good, you don't issue bad report and everything, people are going to recommend you and you are going to get more job. So this chapter talks about that thing we can put in place to have a good shape, to have a good audit tenure, so that we are not going to express incorrect opinion that will have effect on the financial statement, whether with the investors or on all the users of financial statement, and thereby is going to help that organization to reduce the risk of auditors liability. So this chapter talks about those things that we can do to have that. Just like, okay, you want to how do I okay, now you want to cook food. Now you want to cook food, before your food can be sweet, you need to add some seasoning and everything to it to make it sweet, because you know that you want to sell the food to people outside. So what are the things you need to put in place? All those seasoning you need to put in place to make your food go well, sweet, so that people will patronize you very well, and you will not have that part of that seasoning that you put in your food that will make people to be purging. So we can use this practice management as that thing that you can put in your food to make your food more spontaneous and sweet, because you know that you want to sell the food to people outside. So yes, some people are laughing. So just put it like that. Oh, I see this practice management as if I want to cook food. If I want to cook jollof rice now, don't know why this thing is, what's going on now. Hmm? So okay, so we'll see it as if now I want to, okay, I should increase the font. Okay, is it okay now? Is the font okay now? So, like, oh, we want to cook food now. What are the things we need to put together to make this food sweet? That is the same thing as practice management. So, this practice management talks about the quality control. And by the meaning of quality control has to do with that control that company put in place to have a good audit tenure, and to also reduce the risk of expressing what incorrect opinion, the loss of client, and even reduction in legal costs and damages. Because if you have good quality control, it's going to reduce reduction in legal costs and damages. Then damages to professional reputation will not be there, and the firm, and even the elimination of discrepancies of between the professional body. That is, you will have that seamless, and you have that, you can beat your chest that, oh, this report I just give out is authentic, and the management can place reliance on it. So that is quality control. Then we now said this quality control has two-way according to, so the standard that talks about quality control is ISA 220. So after the class, I'm going to share us this chapter review, and also share us the standard, so where you can relate all these chapters to the standard. So the standard that talks about practice management on quality control is ISA 220. So this ISA 220 talks about the quality control about individual engagement. That is the quality control that company can put in place to reduce the risk of expressing correct opinion, to reduce the loss of client, reduction in legal costs and damages, and the likes. So that is quality control. However, according to ISA 220, the quality control can now be streamlined into two. That is quality control by audit firm and quality control by individual engagement. So quality control by audit firm is spelled out by ISQC 1, that is International Standard on Quality Control 1. It says that for an organization, for audit firm to have a good quality control, the following element must be present. Number one, leadership responsibilities for quality control. That is, it is the responsibility of the partners or managers in charge to ensure that they have or they set a proper procedure for good quality control. Ethical requirement, that is, what are the ethical requirements that must be present in our standard we put in place to ensure good quality control and thereby reduce the risk of expressing the correct opinion. Then acceptance and continuance of engagement. There should be a proper way to put in place by an firm to ensure that they accept an engagement and also continue to be the auditor or practitioner for an organization. There should be a quality control in that area. Now, documentation, that is, there should be a standard quality control put in place by an audit firm according to ISQC 1 to ensure that our audit evidence are properly documented for reference purpose. Human resources. Human resources has to do with, that is, quality control. There should be a quality control by an audit firm whereby people that they will put in charge of audit of financial statement of an organization must be what? People that are very, very good and what? They are up to task and they have skills and appropriate requirement to audit financial statement. That is, people that grind in that way. That is what they should put in charge of audit of financial statement of an organization. Now, engagement performance. There should be also review of our audit work. It is expected according to ISQC 1 that an audit firm should set a good quality control on what? On engagement performance, to so as to review the work of what? Of staff that engage in the audit of financial statement of a particular organization. Now, monitoring. Monitoring, there should, according to ISQC 1, that there should be a proper quality control set out by what? An audit firm to ensure monitoring of all their staff when they are auditing financial statement of an organization in order to reduce the risk of expressing correct opinion, loss of reduction in legal cost and damages. That is according to ISQC 1, which is quality control that must be put aside by what? By an audit firm. Now, quality control by individual engagement. The quality control by individual engagement, this one we state ISA 200. That is, you as an individual, what are the quality control, or you as the management or as the manager or the team lead of a particular job. Maybe you want to go and audit now. You know your manager cannot follow you there. It is audit senior that is going to be the team lead. You as a team lead, what are the quality control that you need to put in place to ensure that you reduce the risk of expressing correct opinion? So under this, we still have leadership responsibility for quality. That is, you as the team lead or the person in charge of any audit work should ensure that they put in place good quality control to ensure that they have seamless and good audit tenure. The ethical requirement, as we explained before, the acceptance and continuous engagement, then engagement performance. Under this engagement performance, that's when we have review. That is, we have to review our work. Then changes in professional appointment. That is, when you know that, oh, these are the set of people that have been handling this client audit for the past 3 years, there is need for us to change the professional appointment in order to reduce the auditor's independence. By the time these same people have been going for the same audit work, the essence of independence will be reduced because they will get familiar with those people around the organization, and thereby they can actually tell them or collide with them to perpetrate fraud because they know that these are the people we'll be seeing every day. We know them, we can talk to them. So according to ISA 220 on quality control by individual engagement, says that there should be rotation of auditors in order to move away the auditors threat to auditors independence. Then also procedure before accepting audit engagement. Quality control by individual engagement also states that there should be a procedure to follow before you accept audit engagement, whereby you can actually ask the previous audit what are the risks associated with this organization. As a new auditor can take over the job. Tendering, that is by tendering, this has to do with writing proposal to a client that, oh, we render audit service and accountancy services. That's what we call tendering in audit term. Then low billings has to do with your audit fee. You make it more avoidable for your client so that it's going to have impact on your what on your work, on your opinion that you are going to, not that you used to charge 50 million, for example, then because you now want to attract the client now said that it's going to offer you 10 million. You know, you cannot do that work with your mind now. You'll be saying that is it not 10 million they want to pay me? I beg, I will just do it the way I like. So the quality control, the practice management now tells us that as an organization, we need to put this thing in place to ensure that we have good audit work in order to help us to help the organization or the auditor to reduce the risk of expressing correct opinion. So if you put proper good practice management, it's going to help you to increase your it will reduce loss of client, because if you have been good with your audit report and it does not have issue, your client will increase. Then it will also lead to reduction in legal cost and damages. That is, if you did not issue incorrect opinion, there will not be any need for them to sue you for negligence. Then damage to professional reputation will also reduce, because it's going to give your organization credit over other organizations, and also elimination of discrepancies measured for audit profession. So it's going to make it more seamless to other professions that, oh, in our section, we are doing very, very well. So if we put everything together like this, we ensure good quality control, and thereby it's going to help us to reduce the risk of expressing correct opinion. Please, any question before we go? Do we understand this chapter the way I just review it? Please let me see your emoji so that I can proceed. Do you have any question? If you have any question, please, within 5 minutes, let me see your hands up so that I can quickly take the question and proceed. If you have any question at all, thank you. It seems now this is how it's going to be. So if we see any question regarding this in our exam, we should know what to write. And I want to also employ us in this class. Let us form the habit of writing everything we know, because the reason why I take my time to explain this is for us to go through this chapter and read through it, following this review that I just gave us, to read through it and understand it very well. No, the question is not going to be hard. The question is not going to be hard. I can assure you that the question is not going to be hard. So far, we understand the concept of this chapter, quality control, that if they ask us what is quality control, we should be able to say what we know about it. We should be able to say what we know about it without compromise anything. Just be writing, because they ask you the ISA 220, you know about quality control. Just be writing. Okay, you give them the meaning of the quality control, then you make reference to the ISA that talks about it. You know that under this quality control, we have two types. We have quality control by individual firm, by audit firm, which has to do with ISQC one. Know everything under it, the leadership responsibility for quality control, ethical requirements, acceptance and continuance of engagement, documentation, human resources, engagement monitoring, engagement performance and monitoring. You first of all list all these things and explain like you explain. Before you know, you already write 4 pages. The examiner will not be like, it seems this person actually knows what he or she is saying. You know, the way we trick all these examiners sometimes, by the time they just see that for this small question, you already write 5 pages, they will know, something will be telling you that this person, even though you are writing rubbish, they will not compromise it first. Something will be telling them that, oh, this person actually knows what he or she is writing. For him to write 5 pages like this, this person knows what he or she is writing. And once they open it, true, they will know that you are writing something, you are making sense. So that is how to go about it. No question is hard. It depends on your understanding on that topic they are asking you and the scenario around this the topic. So if this that's why I gave us the tips that first of all we need to understand the tips first. The scenario is very, very important. If you understand the scenario, it's going to make it more simple for us. Thereby we can now relate it to this quality control according to ISA 220 and write everything we know about it. So that is that about chapter 5. Please, can I proceed to chapter 6, please? Let me see your emoji, please. Let me see your emoji if I can proceed. Nobody's saying anything. Thank you so much. So any questions so far? Okay, I have some people just within 5 minutes. I will just entertain a question. So let's see who is asking us. So Mrs. Oluwatomisin Ajayi, let's hear your question, please.
Good evening. Good evening, sir.
Good evening.
Please, can you hear me?
Good evening. Please go on. Good evening,
I want to ask, what's the difference between international standard?
I can hear you. Go on.
I'm asking. I say, what is the difference between international standard on quality control and international standard on quality management? Can you get my question?
Management is different. Management is different from audit now. Management. Did you put your this thing in loudspeaker? Hello, can you hear me now?
Hello, can you hear me, sir?
I can hear you.
I can hear you, sir.
So management and audit are very two different things. Management has to do with managing the financial statement of an organization. That has to do with the part of the company, the client. But this one has to do with you as an auditor. So there are two different things. There are two different professions. So that one talks about the management of an organization, what you can put in place. But this one has to do with the auditors too, which is ISQC1, International Standard on Quality Control. I don't know if you put your phone in loudspeaker. I can hear my voice again. So please, you can mute your mic now, ma, so that I can attend to others. So that is it about that. It is different from each other. Hello, can I proceed
sir.
now? So any other question?
Yes, sir.
Please.
Hello, sir. Mine
if you have a question, please.
No, I raised my hand before now.
Go on, sir. Go on.
Okay. My question is on those elements of quality control by audit firm and that of individuals. If you look at it very well, most of those elements are similar or the same thing. So when you come for explanation, I hope one cannot mix it up. Because when you look at it, there is leadership responsibilities for the firm and that of the individual.
Hold on. So you get it.
I'm just looking at it that if you are writing.
It is very, very simple. The first one is quality control by audit firm according to ISQC1. That is the audit firm, the company, your firm, what you can do to ensure quality control. So everything you are explaining here, you must have to link it to that audit firm. That is leadership and responsibility. That is, according to ISQC1, the quality control, that is leadership, that is people charged with governance in that organization. That is, you are talking about the firm. They have that responsibility to ensure quality control, so as to so as to reduce the risk of expressing correct opinion. Anything you'll be talking about according to SQC1 has to be related to that firm, to a firm. or the client or the company, your own audit firm. Then the other one has to do with you. Maybe you are the leader of any audit engagement. What are you going to do? Because you are the leader in that role. So that's why they call it individual engagement. That is, it's peculiar to you. The first one peculiar to what? To the audit firm, the organization. Do you understand the difference now?
Yes, sir.
Do you understand very well, or you just say yes, sir?
No, I understand. I understand.
Hello? Okay, thank you. So
Hello,
you
sir.
can
I
put down your
understand you
hand.
very well, sir.
So,
It's okay.
okay, thank you. Okay, so also, Mr. Francis, let's hear you. Please, you can put down your hand once I answer your question. Thank you. So, Mr. Francis,
Hello.
please, quickly.
Yeah, good evening, sir. I just
Good
want you
evening, sir.
to quickly let me highlight some of the structure of an audit firm. I've heard you use terms like audit partner, audit senior. I don't know the flow of authority in the audit firm. You spoke about audit manager. Some
It,
of us
it
don't work in an
actually,
audit firm, so we
yes,
don't
that
know
is
the flow
why I
of
said
authority.
it's just like in that your organization where you are working. What are the flow of authority? There are some people that are in charge of decision making in an organization. They are the people that will set policies. Abi, are you listening to me?
Yes, sir, I'm listening to you.
So that one will relate to quality control by an audit firm. That is, those people, those things they put in charge is actually talking about people in charge of governance, people that can make policy and decision in in the organization. It is their responsibility to ensure quality control in these 8 other things that we listed. Do you understand the way I explain like that?
Yes, sir, it seems you don't
Hello.
understand. I clearly get your
I understand
explanation for the difference.
the
But however,
hierarchy.
like
If you
now,
have to hold on,
the
hold on.
hierarchy
If
now,
I so that I
okay?
will not waste much time. Hold on, sir. The hierarchy you are talking about might be different from other audit firms. So that is why I use your company where you are working as an example. See that first one as you. If you are the CFO, the finance director in your organization, you are part of people that can make policy and decision in that your department. So it is we put it as if it's your responsibility to ensure good quality control in that in that particular department. So as a firm generally, there will be some people that will be in charge of decision making in an organization. So those people, it is not their responsibility to ensure good quality control. That is leadership and responsibility for quality control. That is people in charge of governance, people that can make decisions and policies. It is their responsibility to ensure good quality control. Ethical requirement, they will be the one to set the ethical requirement to be followed to ensure good quality control. They will also be the one to determine the acceptance and continuance of an engagement. They will also be the one to determine that, oh, other people, you must ensure that you document your audit evidence very well. So quality control by individual firm, by audit firm has to do with people in charge of governance. They are the people that are the people to make sure that they ensure good quality control. That's according to ISQC 1. So if we have to mention all those hierarchies, it might be different from other audit firm. But however, we have different hierarchy in audit profession, starting from the managing partners to the directors to the assistant director to the manager to the assistant manager, now to the audit senior, to the semi audit senior, to the audit associate. So those are the people. So if you want to say the audit senior can go under quality control by individual engagement, because audit senior will be the team lead. Then we now report everything to the manager or the director, as the case may be. So from that director and above, they are the people that can ensure good quality control by that audit firm. So those are the people that goes with ISQC 1. Then from audit senior downward, they are the people that you can see under quality control by individual engagement. Have I answered your question now, sir?
Yes,
Mr.
thank you, sir.
Francis?
Yes, sir, thank
Okay,
you.
thank you. All right, so last person here, Who am I going to call? Okay. Mrs. Oluwatosin, are you there? Let me quickly hear you.
Yes,
Please go on.
yes. Good
Please,
evening,
we have to
Mr.
be fast.
Idris.
So we need to finish this
Please,
chapter with you
yes,
because
yes.
this
I do. I'm
is
not
going to
even
be the
asking
last.
a question. I'm not asking a question. I just
Okay.
have a suggestion. Please, I just want to
Okay.
suggest if you can just you entertain any question anybody wants to ask, probably after the class, because we need to move fast. This is past 12 already, and we are still on chapter 5,
Past
which is the
12 or
first
past
one you are
9.
picking.
Don't
Past
go.
9,
We
I
are
mean
go.
to say. I'm
Except you
just
want to leave the
suggesting.
class.
I'm just suggesting
Okay. Yes.
that you
I
should
understand.
entertain
That's
question after the whole class, please, so that we can do something
ah.
reasonable this night.
Okay.
I don't know
Okay.
if
I
I'm the
think
only
you
one
are.
on this table. You can ask from others too.
Yes, I concur as
Supported,
well.
sir.
No
Yeah,
problem.
Supported. I concur.
Supported.
I concur.
Supported. Okay.
Supported.
Supported.
So you are
supported.
saying that, hold
Though.
Supported.
on,
Oh.
no. So you are saying that I should not entertain any question, even though we finish by 11. I can decide that I don't want to entertain any question because it is late by that time.
No,
So,
no, no. After the class.
No,
No,
After
what
the
we are
class.
saying
After
is
the class,
we
let's
because
finish
entertain
the
hold
class.
on,
question
because the
after
way
the
After
you
the
class.
class.
understand this now, hold on now,
those class is a problem.
Let's make
because
a
the
short
way
up
you
now.
understand it now, the way you understand the class now, another person might not understand like that. So going by when we finish the class now, it's going to be like, oh, and maybe around 11. I might not remember everything now. We are all human beings. So it's better as we finish this chapter like this. We ask small question, about 5 minute question, then we attend to it and we'll move on. Instead of waiting till the after the class and before we know now, I will not be able to attend to any question because after today now, it just if I can attend to it, I will be able to attend to it. I also have another engagement too. But let's see how if that one is going to work for us. Let's go to chapter 6, please. So that's that about chapter 5. Then we can see the standard that talks about it. So this chapter 6 has to do with the audit approach. It has to do with audit approach. I hope you can hear me, please. So please let me see your emoji if you can hear me, please, so that I can proceed. Okay, thank you very much. So this chapter 6 talks about the audit approach. What is audit approach? What do we understand by audit approach? The audit approach can be divine, very, very simple. It has to be with that method adopted by an auditor to carry out its responsibility. The approach, the strategy, the method you use as an auditor to carry out your responsibility is what we understand by audit approach. However, this audit approach, according to this chapter, can be subdivided into 4 elements. That is, the 4 basic approach in audit of financial statement. Don't forget, we said audit approach. It is that method adopted by an auditor to so as to ensure that it carry out its responsibility and also to form an opinion whether the financial statement of that particular organization is free from material misstatement, fairly presented, and also in compliance with what? With a regulatory framework. So the method, the strategy you can use by an auditor to carry out your responsibility is what we call the audit approach. However, according to this chapter, we have 4 main basic approach of audit of financial statement. Number one, we have risk-based approach or business risk approach. Then number two, we have system-based approach. Then number two, we have substantive test approach. And then number four, we have financial statement approach. So I will explain one after the other. Please let me see your emoji if you are flowing with me. Thank you. Thank you. So let's proceed. Now, the business risk approach. This business risk approach has to do with probability of occurrence. It has to do with the probability of occurrence of an event or development that might have adverse effect on the financial statement of an organization. So that approach, now that it is called business risk approach, it is the probability of occurrence that the event or development of that risk might have adverse effect on the organization. So what are we going to do is for us to now define a means, a method for us to now realize that, oh, these are the risks associated with this business, both internal and external, and also provide a recommendation on how to tackle that what risk, so that it will not affect the financial statement, or it will not have effect on the financial statement of that particular organization. I hope I have substantiated the meaning of that risk-based approach. So risk-based approach has to do with the occurrence. That is how okay, we know that this business risk approach, that is, it is the approach we can use as an auditor, to eliminate the risk of any adverse effect that the risk can have on the financial statement of an organization. And we said under this business risk approach, we have internal business risks and external business risk. What is it? Please, those of you that you are doing thumb down, is it that you don't understand what I'm saying? Because I don't know. I read a lot. If you have to understand that what I'm saying is right, you're supposed to do thumb up, not thumb down. Ha! You know that all our this thing has meaning in this class, so that we know what I'm doing, not that I'm just talking to myself or I'm just explaining rubbish. Please let us get it right. If you are using thumb down, it means that I'm just doing rubbish, I don't know what I'm saying, or maybe you don't understand my explanation. But if you are doing thumb up, it means that hey, you are going along with me. So let us understand this emoji we are using. And if you have questions, I will still create chance for us to. So just make sure that I'm not going to entertain any question while I'm still explaining the chapter. It's after the chapter, before we move to the next one. That's where I'm going to quickly give us about 5 minutes for us to explain, to ask our question. So now, the risk-based approach, I said it is the approach or the strategy you can use as an auditor to eliminate the risk of adverse effect, to eliminate any adverse effect risk on the financial statement. Normally, we know that every business is associated with every risk, but our own now, the approach we are going to use, that we continually look into any risk associated with any business, either it is internal risk or external risk, then now recommend the solution that will now reduce the effect of that risk on the financial statement. So what are the type of business risk? We have internal business risk and external business risk. So example of internal business risk is the risk that affect the business internally. So the example has to be with risk of weak management. That is, if the management are weak, it can cause internal business risk. Then lack of customer care, if the company is not doing well to their customer. Risk of fraud, where the company is perpetrating fraud or they are exposed to fraud. Misappropriation of company assets, when there is poor or weak internal control. These are the internal business risk that can have adverse effect on the financial statement of an organization. So have to understand this. Now, if you understand the internal business risk, which has to do with risk of fraud, so we ensure that the company does not perpetrate fraud. We ensure that there is no misappropriation of company assets. We ensure that the company has a good financial management. We ensure that we treat our customer very well. So these are the recommendations we can do to reduce the risk of this internal business risk on the financial statement of that particular organization. I hope I am communicating. Please let me see your emoji, please. If you're okay, thank you. So let's proceed. Now, to the external business risk. This is the external forces or external risk that can affect the business. What are these risks? That the possible loss of major contracts, when you are an organization that you are losing major contracts to your competitors, is going to have effect on the financial statement. So what we need to do in that regard, the recommendation is to ensure that we up to our game very well, so that the risk, all these risks are going to be eliminated. Where we have an impact of new competitors in the market, we have a threat from competitors, impact of non-compliance with new technologies. If you are not in vogue, if you are not updated with new technologies, it's going to cause external business risk. So that is that about the risk-based approach. Then quickly we move to system-based approach. This one focus on internal control system. That is the system-based approach focus on internal control system, and the standard that talks about it is ISA 315. ISA 315 talk about the internal control system of an organization, that it can also another approach that we can use as an auditor is to ensure that the internal control system of an organization is very, very strong. So according to ISA 315, the following are the components of internal control system, which has to do with control environment of internal control, the firm risk assessment, the firm information system, the control activities, review and monitoring control. This one is telling us that the system-based approach focuses on internal control system. So according to ISA 315, it says that an auditor must define that means the strategies or the approach to ensure that the internal control of an organization is working perfectly in order for it to reduce the risk of adverse risk on the financial statement of an organization. Because if internal control system is weak, there will not be compliance. The staff will be behaving badly to their customer. There will be fraud perpetrating in that organization. There will be misappropriation of assets, because internal control is that particular department that ensure compliance. So that is another approach that we can use to reduce the risk of adverse effect on the financial statement of an organization. That is by ensuring that the internal control system of that organization is working efficiently and effectively. Another approach we can use to audit the financial statement is substantive test approach. This has to do with through analytical procedure and review. That is the standard word-to-word, figure-to-figure auditing of financial information. That is under our balance sheet. For example, under our balance sheet, we have or statement of financial position. Now, statement of financial position, we have our PPE, IS 16. What are the ways they use to recognize that IS 16 before they now bring out the figures on the face of account? So this through substantive testing, through analytical procedure, we are going to do the audit check by knowing the cost of that asset they purchased, the depreciation they calculated, the amortization they do on the goodwill, for us to arrive at that figures in the financial statement. So, however, this substantive testing has to do with analytical procedure, word to word, thoroughly check the recognition and how those figures comes about in the financial statement. Because if it is not checked, it's going to have adverse risk and effect on the financial statement of that particular organization. So the substantive testing is another method we can use to check or to audit the financial statement of an organization through thorough and comprehensive testings of details and transactions or that has happened over the financial year in that particular organization. We are doing this just as to reduce the risk of expressing correct opinion, and also to reduce the adverse effect that risk of not having good substantive testing on the financial statement of that particular organization. Lastly is financial statement approach. That is through a thorough examination of the financial statement, like I said, from word to word, figure to figure of financial information, and how those figures that was reported in the financial statement comes about, if they have proper cutoff, if they are completed, if they are accurate, and if they have a valuation in that particular transaction before they now present it in the face of financial statement. So this chapter is chapter 6, talks about the audit approach. We've mentioned the approaches that we can use as an auditor. So in the case of the exam, they are still going to ask us. So we are not expected to just say this thing. You explain all this thing and relate it to that scenario they give to you, because they will not tell you what is audit approach. Now, If it is audit approach, it is not for you to explain that, oh, this is what audit approach means. It now have 4 basic approach that you can use to audit financial statement. You mention it and you explain thoroughly. And as you are explaining, you relate it to that financial to that scenario. So by relating your answer to the scenario, it's going to convince the examiner that, oh, you actually know what you are saying. So everything, like I said, in this audit and assurance, do it as if that thing is in front of you like this, because it's not like SFM that you'll be calculating cost of capital that you not even see. They will just tell you the cost of capital increased by this thing, and you use it to calculate a particular something. But now this one, you will see it that the cost of capital that used is 40%. I want to see it now. Give me the evidence that makes it to be 40%. Why not 60%? So it will be like you are seeing that this thing in real life. Whereas other advanced tasks, it is what they present to you in the question you are going to use as an answer. But this audit, you understand it and you put it in your front like this. That this problem now is standing in my front now. I want to provide solution to that problem. If you understand that one very well, you are good to go. So let's quickly go to. I'm not sure there's no question about this. This one is well explained and it is very, very simple. Let's go to chapter 7. We are now moving closer now. We are getting there. Some of that chapter that is somehow tough. Now, audit planning. Very, very simple. Audit planning. Audit planning. What is audit planning? What is planning? There are two words here that are very, very simple. We have audit and planning. What is audit? Independent examination of financial statement by an independent auditor to express or to give an opinion on the financial statement prepared by the management. If it is of true and fair view, free from material misstatement, fairly presented, and also prepared in accordance with regulatory framework, that is audit. Now, planning, it is alternative course of action put together by an organization before time to ensure that the objective of setting up that particular thing is met. That is alternative course of action put together in advance. That is, you want to do it, okay, I'm going to we are writing our exam next week. What are my plans now about this exam? How do I want to do it? And you know, you are doing alternative course of action in advance. Okay, if I get to the exam hall, I will first of all start with question number 3. Or I will not start with question number 1 because it's always tricky. I'll start with question the other section that I know that I can answer very well. You know, you are putting alternative plan in advance for you to know that, oh, this is what I'm going to do when I get to the field. So it's just like that audit planning. So this chapter focuses on the course of action put in place by an auditor to effectively execute his what audit work. And the standard that talks about audit planning is ISA 300. Don't forget when we are in chapter 5, we said ISA 220 talks about quality control, that is quality control by individual engagement. And when we move to chapter 7, we talk about audit approach, and we also mentioned the standard that talks about the audit approach. What is that standard that talks about the audit approach? The standard that talks about the audit approach there, I think I mentioned it now, is okay, on that system-based approach is ISA 315. So now, this one now, which is audit planning, this one has is a separate standard in audit and assurance, and the standard is ISA 300. So if you see this kind of question in the exam, it is very, very, oh, this person, I'm busy. When you see this kind of question in the exam, it is very, very proper for us as an professional to give them the meaning of audits and planning together, and also make reference that, however, according to ISA 300, audit planning can now be defined as so 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 so. You give them the meaning, then you now move. That, however, after that, the chapter also covers the following: the audit memoranda. What is audit memoranda? That is, these are the templates on which we are going to base our alternative course of action. The audit memoranda has to do with that platform or that step by step you put in place to ensure that you have what? Effective audit tenure. So now, one of the audit memoranda is the assignment objective and report to be issued. That is assignment. What is the objective of this assignment? The objective is to audit the financial statement, or the objective is to come and give assurance engagement, or the objective is to come and give assurance services. So, like someone asked me last week, or we treated one of our questions, there's difference between assurance engagement and assurance services. So it is very, very important for us to know difference between assurance engagement and assurance services. So we are going there. When we get to the beach, we know how to cross. So let's proceed. Like I said, this audit memoranda has to do with the step-by-step plan that we put in place to ensure that we have effective audit exercise. So the audit memoranda, that what are those things that was going to be in our planning stage? What are the things that we are going to say that we want to plan ahead? So the objective of our work that we want to do must be know and how to report any issue. Then the audit timetable, that is, okay, this is what we are going to do when we get there. We are going to first start with system documentation, how they do things in the organization. Then we now review their financial statement. Then we now do questionnaire. Then we gather audit evidence. You do your audit timetable. That's another audit memoranda. Then changes in client environment. You need to know what are the risk associated with that business. The client environment, internal and external environment forces. You need to know that everything will be put in our audit memoranda. There's summary of all relevant ratios. That is, all the ratios that we are going to talk about, that we are going to use to form our materiality. Okay, that all this ratio. Okay, we have a profitability ratio. What there? 20%. What is their ratio on profitability this year? 30%. So we also do the summary of all relevant ratio. That is what we call analytical review before we start the exam. Planning decision for before we start the audit. Planning decision for the audit. That is, after the planning, what is our decision? Our decision is that okay, we are going to do this. This is the time frame we are going to use to finish our audit work. That's also part of our audit memoranda. The client, staff, and their uses. That is, the staff that the client has and our own staff, the uses, all the staff they are going to use. We will need 4 staff here. So all of them will be on the field. Mr. ABC will be the people that will work on this one. Mr. BCD will be the one that will work on this one. So all these things will also be put together in our audit memoranda. Don't forget, this audit planning is for the audit firm. It's the audit firm that will set out this. That these are the things we are going to put in place to ensure we have good audit tenure. Evaluation of possible problems area and way to deal with them. That is, we will have evaluate that, we audited this account last year. These are the problems we encountered last year. So we are also going to put in place the possible problem. These are the problems we are likely to face. And this is the way we are going to deal with them. Everything will also be stated in the audit memoranda. Now, staff require allocation of work and time budget. I just said it now, that the staff we will need to do the job. We will need 4 staffs here, or we need 7 staff. So allocation of job, Mr. ABC or Mrs. Suliyat and Mrs. Zainab is going to work on payable and receivables. The other one will work on revenue and cost of sales. The other one will work on expenses and other payables. Okay, everybody, sorry, I'm back. Please, can you hear me now? Please let me see your emoji if you can hear me, please. Okay. All right. So I stopped at staff required allocation of work and time budget. I've explained that. Now, attendance location for more than one audit location. That is, we need to know if the company has two different branch, maybe branch one and branch two, and we need to check. So we also need to do our planning that, oh, these are a set of people that will go to this location. These are a set of people that will go to this location. And the last one is proposed method of communication with client. So we need to also determine that, oh, we need to understand our client, that there are some clients that most of their documents that you will request for, it is in a hard form. I mean the hard copy. So you may need to be going to their office to request for the listing through mail. Then, however, some people now, they have this soft copy. All their document, they have soft copy for it. So you just for you to send mail to them. Please, I need samples for these expenses, the invoices or the receipt you issued or you collected for this particular transaction. You send mail to them, they reply to you. So in all this memoranda, you also set that method of communication. Now let's go. This chapter also talk about the risk, the audit risk method, and what are the risk method. What are the risk methods? It is also going to be stated under this audit planning. What are the risk methods? What are the risks associated with the business? We need to know that. How to detect the risk associated with the business, then how to control the risk, then how to assess the risk and the procedure to assess the risk. Then, however, under that, we have three types of risk. We have business risk, we have financial risk, and audit risk. Business risk has to do with risk that are associated with the business. Financial risk has to do with the generation of income to determine whether the company is making profit or loss. The risk of that, then the audit risk, and also the risk of expressing incorrect opinion. So this chapter also talk about the risk model, the risk associated with the business, how to detect it, and how to control it, and the assessment and procedure to go about it. However, then again, it is also during audit planning we will set our materiality. Now, materiality in planning and performing audit. This one has to do with the materiality. That is, materiality I explained last week. It is materiality has to do with those particular aspects of client transaction that might have adverse effect on the financial statement if it is not properly taken care of. Now, materiality is set during all this planning. And how do we set materiality? Let me explain. Now, we are going to compare. Now, you want to audit this account now. Definitely, you compare some figures with last year account, like opening figure. Some opening figure, like your payables. If you are owing some company now, some company is owing you, the opening figure or the closing figure for 2023 will be the opening figure in 2024. So you also need the financial statement of 2023. So now, let me now take, for example, under revenue. The revenue for 2023, the total revenue is 50 million, for example. So revenue in 2024 now is now 150 million. You can see that there is 100% or 150% increase in revenue this year. So it's a point of material that, oh, from 50 to 150, this is material. Meaning that when we get to the field, when we get to the company, we need to check this our revenue very well. So then we set materiality that this revenue, because it's 50%, we are setting our materiality to be that everything under that revenue, any transaction more than 2 million, we are checking for audit purpose. That is, any transaction more than 2 million, that is, we request for the invoice or the receipt, and we also trace it to the bank statement. It is through audit planning we are going to set all those materiality that, oh, materiality will set this period. So if it is more than 20%, then we set Let me show you example of one materiality before I proceed. Please, I hope you can hear me very well. Okay. Please, are you seeing my screen? Let me share again. Okay. So I hope you can see my screen now. I hope you can see my screen now. Okay, perfect. So I want to I want to check another this thing if I can share the screen for materiality. Where is this one? 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 Is my okay paper? Okay. Police expenses. Shit. Please, I just want to open a document where I can show you materiality. I think I show us maybe during our last this thing. So let me show you this where you can see materiality. What we are talking about materiality. So this is, I will just quickly share the screen so that we can see. I want to present another thing. Okay, please, can you see my screen now? I changed the screen. Hello, can you see my screen? Please, I don't appreciate you people that are doing thumb down. It's not actually making sense. It's like we are not doing the right thing. So if you want to concord that you are hearing what I'm saying, please do thumb up so that we understand. So this is, let me increase the font. This is what we call materiality. You can see that this is don't let me use my company this thing. So these are the company that I'm auditing. So this is the parameter. This is the materiality. That is normalized loss before operating, before tax. That is, these are the transaction. This is the current year. I hope you can see my screen. So let me just use this one. This is the total transaction. Then this is the materiality set. That is under that. So now let's go to revenue. This is total revenue for the year. This is the materiality set. That is, this is the materiality set. That is, so it is different from last year to the, so you can see the percentage increase 20%. So now this is the total asset. This is the percentage. This is the percentage. So now equity and everything like that. Now, based on that, the materiality will now set that any transaction more than 3 million, let me use this one. This aspect, let me use red. If you cannot see the screen, probably it's your network. Please, can you see my screen, everybody? Can you see my screen, please? Yes, okay, thank you. So this one I colored in green is our materiality. It means that any transaction in that financial statement that is 3 million, 3.3 million and above, we are going to ask for supportive documents. We are going to have a supportive document. That is what we call materiality. And this materiality, it is set before the what? Before the audit exercise. You'll be wondering that how are we going to know? Because the company will have sent us their management account, which is their trial balance, and we'll compare with their last year financial statement before we can now do all this materiality. Then let me quickly use this thing to explain this performance materiality. It means that when we now check for a particular ledger, maybe under the revenue now, there's a ledger that calls revenue from sales. So revenue from sales, let's assume that the total ledger of that revenue for sales is 3.3 million and we want to pick it. as a material, that is, we want to pick it for audit supporting document. It means this performance materiality, it means that 80%, that is 80% of this 3 million must be checked. That is, we must ask for up to 80% supportive document. Let's assume that the total amount in that ledger is 3.3. That is, we must check for 80% of that revenue. We must check for 80% of that revenue, 80% of that particular ledger, to substantiate that, oh, we have already done our audit work on this particular ledger and we are satisfied that all the figures are fairly stated. Please, do you understand this materiality that I just showed us now? Please let me see your emoji. Okay, thank you. So that's that about materiality. Let me stop sharing this and share the other one. Where is this? Oh. So that is that about this aspect. The materiality, I think, is very explanatory now with that distance I show us. So now the ISA that talks about the materiality according to audit planning is ISA 320, and substantially the performance materiality is when this transaction is let's assume that 4 million is the total transaction in that ledger. That is all the evidence we are going to request for. You cannot request for all the total transaction in that ledger because it is much. But anything where we are going to request for must be 80% of our total material. The material is 40%. 80% of that 4 million is what? Should be around that maybe 3.6. So it means that we are going to request for supporting document worth of 3.6 million out of that 4 million. That is performance materiality. That is why you see that 80%. That is, anything we are going to check out of that 3.3 million must be 80%. So 80% of that 3.3 million must give us 2.6 something. That is the aspect of that performance materiality. So that the answer that I talk about materiality is ISA 320. It talks about revenue, and this is what I just showed you now, and that is that about materiality. The ISA that talks about it is ISA 320. Now, computer in audit of financial statement. How do we incorporate computer system in the audit of financial statement? Like I said, our company, we are using Caseware. The Caseware is that audit software that can make audit work more very, very simple and alight. It will prepare financial statement for you. Just like we that we are working on an accounting firm, that we are using all this accounting software like Zoho Books, the Zero software, the QuickBooks, the Sage, as the case may be. So we have audit software, we have Caseware. This Caseware is what we are using in my current office, and that is what the Big Four are also using. So this Caseware, you just import your trial balance. Once you get trial balance from the client, and you see that everything is balanced, you export it in your Caseware, and that Caseware is going to prepare the account for you. It's going to roll out some figure, maybe aspects that are not balanced. It's going to color it red. If the account is balanced, the account is just going to balance. It's as balanced as that. So it means that the software has prepared the financial statement for you. All what you need to do is to go to the field, ask for supportive document for the materiality you pick, then you are good to go. Then any aspect that is throwing out that is not correct, you make sure you first of all check if the management account, which is the trial balance, is properly done. Maybe the classification is properly classified. Where they're supposed to classify assets is where they classify assets, and you still find out that it's still showing negative. Then when you get to the field, you now correct it that, oh, how is this thing like this? Maybe you raise audit journal to correct the posting and make the account balance. So the software is just going to make your work simple. So what are these software? Then we say computer may be used to task for this following situation: audit administration and control, audit planning, that is the software can do audit planning for you, preparing the audit working papers, you can do analytical procedure and also take sample if necessary. Then another one you can use is control objective of information technology related, that is COBIT. Then we talk about the advantages of it. So advantages of computerized or computer in audit of financial statement generally can goes along with this COBIT and CAT. So with that, we have substantially explained the chapter review about our audit planning, what we need to do from our materiality, the audit memoranda, then the computer in audit of financial statement. Let me quickly allow question here before we proceed. Quickly, any question? Janet, please, if you have question, please quickly raise your hand. If you don't have, please let me quickly proceed. Mrs. Yanolua, please, you have the floor. Please,
Sir, please,
if
can
you
you
don't have the question, I
re-explain
might not be able to. Please
performance?
kindly raise up your hand. And you say what?
Please, sir, can you re-explain the performance materiality? My network was breaking. I didn't get it, sir.
Performance materiality has to do with, how do I explain this now? Do you understand the meaning of that materiality? Performance materiality
Yes.
is that extent of what you are going to check from your material you pick. If your material you pick is 4 million, for example, you can put your performance materiality that out of that 4 million, at least you must check up to 70% of that your materiality. That is your performance materiality. That is, in that ledger, if they have 50 transactions there, you must ask for any supportive document to substantiate those figures. At least 70% of that 4 million must be tested by you as an auditor to arrive that 4 million figure is actually fairly presented. You cannot check everything. Just imagine the account they use 1 year to prepare. You as an auditor, you just go there that you want to check it, you want to check everything. You cannot. That is why we set materiality. With that materiality, you'll be able to track that, okay, if I cannot check everything, at least I can check 70% of this work. That is what we call performance materiality. Do you understand now?
Yes,
Okay,
sir.
you can
Thank you,
put down
sir.
your hand.
Yes, sir.
Mr. Benjamin, please quickly, your question. Quickly,
Okay,
Mr.
sir.
Benjamin.
So my question is, what are the basis for setting this materiality threshold? And then secondly, again, is there any rationale why it seems to vary between one organization and the other? Because it appears
depends
the
now.
thresholds are not the same. So I don't know if
The
there's any
threshold cannot
rationale why
be
it seems different.
the threshold cannot be the same that because of the flow of transaction. The flow of transaction last year will be different from flow of transaction this year. Last year transaction might be high, this year transaction might be low. This year transaction might be high, so last year transaction might be low. So you compare, the rationale is be that what are the transactions that flows in this year? That's what you are going to set your threshold on how you are going to base your materiality. So if you, like I said, maybe under revenue, the total revenue last year was 50 million. Now this year, the total revenue is 150 million. That is, there's increase in flow of transactions this year. So you are going to set your materiality that since there's increase, there might be likely that this company, they did not follow IFRS 15 on recognition of revenue. So we are going to set our materiality that under revenue, maybe the total revenue is 150 million. We set our under revenue that our materiality should be 10 million. That is, any transaction, any invoices that is 10 million and above, we are going to check for our audit purpose. That is threshold we set. That is what we call materiality. Do you understand now, Mr. Benjamin?
Yes, sir. So the first question is, what are the basis for setting this materiality
I just
threshold?
explained the basis.
Are
It's
there
the
any
flow
basis?
of transaction. It's the flow of transaction.
All
It
right.
depends. If the transaction is high, then you increase your materiality. If the transaction is low, then you reduce your materiality.
Okay,
You
sir.
understand
Thank
now,
you.
sir?
Yeah,
Okay,
thank you,
so
sir.
Mrs. Esther, please quickly. Oh.
Okay, I want to ask I'm asking regarding under the risk audit model. That's for this risk assessment procedure. Can you please talk about it? The risk assessment procedure.
The risk assessment.
Procedure, risk
Are you talking
assessment
about
procedure.
chapter?
Just talk about.
Are you talking about chapter 7, chapter 6?
It's chapter 7, sir.
What
It's under
What
the
do you mean
second
by
point. It's
where
under
is?
audit risk model. That's the, I think, the fourth point,
It is
risk
the
assessment
it is
procedure.
it is it is the step you can use to assess the risk associated with that particular organization. It does not peculiar to that they must list it like this. What are the way in you can use that? Oh, this is how I can identify risk. Maybe you see that there's the invoice they raise for a particular transaction is not well documented. That one they can use it to perpetrate fraud. So that is the procedure you can use to assess the risk there in that aspect. So it does not peculiar to, oh, they have to list it, has to follow this procedure. So when you notice that customer are just complaining that, oh, this company, they are not attending to us very well. One of the risk assessment you can use that. What is the cost? Why are you not attending to your customer very well? Because if you did not assess it like that, it's going to have effect on the financial statement. As I said, this audit is spiritual. It's more than the way you guys are just saying it. So the more you can understand this is to put it as if this is in front of you. Forget about what they write in the book. How do I assess this risk? How do I know that this risk is actually exists? It's for me to follow this procedure. What are the procedure? If I notice that one of the invoices I'm checking, there are 3 people that are supposed to sign during your system documentation. It is the way people transactions are being carried out in an organization. Maybe they tell you during your system documentation, they said if we raise invoice, so there are 2 people that the signature must be present. The person that prepare it and the person that review it. Now you now notice that it is one signature you see. That is, you now see one signature. That is, the other person did not review and they are allowed to go. So your risk assessment is to ask question. Why is it that one person signed instead of 2? You are assessing that risk because if probably the second person did not sign, they can use it to perpetrate fraud. They will now ask you that did you review it? You say no. So and the money has gone, it has gone. So that is another way to assess your risk. Do you understand? It does not peculiar that they have to list it like this. You understand the basis of that particular. That's why I said this audit is spiritual. Understand the basis. Put it as if this thing is happening in my real life situation. How do I assess the risk in this situation? So you think you'll be the one to form the problem. You now put the problem as if the problem is sitting in front of you. Then you now recommend solution to that problem. Do you understand now, Mrs. Esther?
Yes, thank you, sir.
Hello. All right. So
I say
last,
I
please, you can put
understand.
down
Thank
your
you,
hand.
sir.
So Mrs. Okay, you can put down your hand. So the last person is Mrs. Choma. Please, quickly. Your question. Mrs. Choma, are you there? Okay, she's not there. Let's
Yes, ma, I am. Yes, sir. Yes, sir. I'm here. So my question
please
is
go ahead.
about the COVID. COVID, sir. Can you throw more light on it?
Okay.
Or explain?
There's nothing to
Thank
throw
you.
more light. It's just an accounting package that you can use to do your audit work. It's very, very simple as that. Like I said, this we misplace this thing that once you see any word in this audit, it has to go with this meaning. It is practically wrong because they will assume that this thing is happening. So far, you understand the base. They said, "Oh, computer in audit of financial statement." So that COVID is telling you that is another application package that you can use to audit, utilize your work. So that's why I said the advantage of general use of computer in audit, like that case where I mentioned before. So there's that case where can be your COVID, it might be cut. So the advantage is going to be that generally it make audit work very, very simple and it make your transaction calculation to be accurate and effective. So those are the things you need to put in place. Not like it must have this particular meaning like this. Do you understand? Because this thing, they are not going to ask you, they are going to link it to the scenario. Now, give us the advantages of this COBIT. If you use this COBIT or this computer in audit of financial statement, what are the advantages? that you tend to be and what are disadvantages. That's what they are just going to ask you. They are not going to ask you the meaning of COBIT. Do you understand, Mrs. Chioma? She has disappeared again. So that is that about this
I'm
chapter.
fine, sir.
So we'll proceed. Thank you. So we'll
Thank you. I
proceed
understand,
to
sir.
the chapter of the day. The chapter of the day. The chapter of the day is the reason why I'm trying to be fast like this because my battery percent now and there's no light. It's just 51%. It's just 51%. So I need to be as fast as possible. So we are moving on. Thank God we've spent close to 2 hours now. So we are moving on to chapter 8. This is the art of the exam. Please, if you know that you want to pass audit and assurance, please come forward. This is the chapter. This is where we are going to. This is the chapter. This is where we are going to. Please, we need your attention very well. And this place, I'm going to be very relaxed a little bit. Take my time to explain. So, if you know that you want to, you are actually mean this audit that audit is me and you, come forward. Come and sit in front. Now, what is audit evidence? It is very simple. What is audit? What is evidence? Audit, we all know the meaning of audit. Evidence, what we can use to show that we test the transaction and the financial statement. That's our evidence. It is the evidence we now document together. So this aspect, now, let me reiterate a little bit. In our skills, when we are in skills, PM is one of the spiritual course. And that PM you are seeing is very spiritual in the sense that there's one topic in skills under PM. It is called relevant costing. So if you do not know relevant costing, you cannot pass PM. For those of us that pass PM, in one way or the other, we must have it through relevant costing, because that relevant costing can be linked to this standard and absorption costing, can be linked to throughput accounting, can be linked to relevant limiting factors in this thing, can be linked to traditional method, which is so that one covers all the area. So as this audit evidence in this audit, because this audit evidence has to tell us about how you are going to gather that audit evidence on which to form your opinion, how to pick samples is still under this audit evidence, and all these things I'm mentioning, they have their own standard, and everything is put together inside this audit evidence. How you are going to make samples, how you are going to do analytical procedure, how you are going to do system documentation, all those evidence, how you are going to document it to form your working paper. So those are the things you are going to see under audit evidence. The specific consideration for selecting an item, initial engagement, audit engagement on opening balances. How do we check opening balances? That is the balance brought forward from last year. The closing balance last year will be the opening balance this year. How do we check that as they are as they are presenting it as opening balance? You must check that, last year closing balance was 50 million last year. It must not be 49,500,000 as opening balance this year. You have to trace the closing balance and confirm with the opening balance. Everything is specified under this audit evidence. So what I'm saying in essence is that this audit evidence is the art of our exam. So if you want to know more, please come forward. Now, what is audit evidence? Like I said, the audit evidence, the ISA that talks about audit evidence is ISA 500. We said this chapter focuses on strategies, ways, and method to gather audit evidence on which opinion is what is formed. And I said, this chapter covers what? Gathering sufficient and appropriate audit evidence. We started like that. What is sufficient and appropriate audit evidence? When something is sufficient, we are talking about the quality of that evidence. When we say something is sufficient, we are talking about the quality. The quality is how complex, how big the thing is. If they have transaction, about 100 transaction, whereas that is the quality of that transaction, that is it is 100. That is, we have to check for the qualities, how large the transaction is, and how can we pick some transaction that will be sufficient enough to be called our audit evidence. So this one can talk directly to materiality. If we have 100 transactions and the total 100 transaction made up of 10 million, so it means that if you want to, the sufficiency is that at least we have to check about 80% of this transaction in order for us to make an opinion that with this 80%, which is 8 million out of 10 million, is sufficient enough to be our what? Audit evidence on which you can form our opinion. Please, do we understand the meaning of that sufficiency in audit evidence like that? Please let me see your emoji if you understand. This Mrs. Vivian, you people that you are putting hands down like this, I'm going to fight you. Yes, you see, Mrs. Oluwatosi still did the same thing. There are even many. See, is it that you don't understand? If you don't understand, write it here so that I will see it. Not that you just be doing thumb down for me. It seems that I'm just explaining rubbish like that. Please, if you do not understand it, give me, I will say it again. That's what you are going to say, not to be giving me thumb down. We are all professional here now. So, sufficient, as I said, sufficient has to do with quality. What do we call quality? It's different from quantity. What do we call quality? Oh, I mean quality, not quantity. Quality is, it is big, plenty. That's what we call quality. And that quality can be seen as sufficient. Okay, and I'll give an example that in a particular transaction, we have 10 100 transactions, and the total transaction is 10 million. That is, the total transaction is 10 million. Before we can say that that transaction is sufficient, which is the quantity that we can use as audit evidence, we have to do about 80% of that 100% to be able to call it as it is sufficient, and it is actually called sufficient. It is sufficient to be our audit evidence. That is, out of 80%, out of 100%, we pick 80. That 80%, which is what we call quantity, is sufficient enough to be our audit evidence. So, sufficiency as audit evidence has to do with quantity. Quantity means how large, how plenty it is. That is sufficient. Appropriate now has to do with quality. Quality. Let me start an example again. We said we have 100 transactions, and let me do it. We have 10 transactions, and the total 10 transactions is 10 million. So, but one of these transactions is we have 200,000, 300,000, 5 million, 7 million, 2 million. We have about 7 transactions like that are made up of that 10 million. But out of that 7, it's only 2 that the amount is big. Maybe we have 2 million and 7 million and 5 million. 2 million and 5 million is 7 million out of 10 million. And we have 10 transactions. And out of 10 transactions, only 2 there form 70% of that total 10 million. So our appropriateness means that we can choose that 2, which is 7 million and 10 million, to be our quality, which has served as quality to our audit evidence. So sufficiency have to do with quantity, while appropriate have to do with quality. Do you understand now, everybody? Please let me see your emoji if you understand now. Sufficient have to do with quality of audit evidence in order to form our opinion, while appropriateness has to do with quality as audit evidence to form our opinion. Do we understand now? So let me proceed. Thank you. Let me proceed. They still beat my team this night, but I will not panic. I will just proceed like that. Where's my other phone? Okay. For the first time, I did not watch Man U match as well. So let's proceed though. Let's proceed. Let us proceed. Let us proceed. Now. Okay. Let's assume going until on Wednesday. So now, I am sure we have understand the meaning of quality and quantity. Now, the next thing is what are the procedure to generate this audit evidence? Now, we all know the meaning of audit evidence, the strategies where we can use to gather our audit, our working paper, or our evidences on which we form our opinion. We talk about the aspect of sufficiency and appropriateness of audit evidence. Then sufficiency, we said, it has to do with the quantity, which is how complex, how large, while appropriateness has to do with quality. Then we now move to the procedure for generating audit evidence. What are the procedure? How can we gather audit evidence? One is by inspection, is by to do inspection, to inspect the transactions. How did they do it? Observation, you observe like this. You just go in one place like this to know the way they are doing it. You observe. Inquiry, you ask, how do you do this? How do you do this? External confirmation, that is, external confirmation has to do with bank confirmation, for example, or debtors and creditors authorization. External confirmation has to do with, okay, when we want to audit you, you told us that you have account with GT Bank, you have Naira account with GT Bank. Is there any bank you have dollar account? So our external confirmation is to do a letter and send to that your bank. So the bank will now give us the total account. Maybe, as you said, you have account with GT Bank, you have Naira account. Maybe you still have dollar, you have pounds, you have euro, and you not disclose it for us. So with that external confirmation, the bank will tell us that, oh, this person actually have dollar account with us, have Naira, have pounds, and have euro with us. So we not rely on that information you give us that, oh, it's only Naira account I have with GT Bank. Oh. With that, our external confirmation is going to tell us if you actually have more than one bank account domiciliary with the bank. So in terms of debtors circularization, maybe you said you are owing these people 5,000 or 10,000, for example. We circularize that vendor, that customer, that, oh, ABC Limited said that he's owing you 10,000. Please, is he actually only owing you 10,000? That is another example of external confirmation. Now, payables. Oh, this Mrs. Florence is owing ABC Limited 20,000. We circularize Mrs. Florence that, are you truly owing this company we are auditing? So Mrs. Florence will now tell us, no, yes, I'm owing the company, but it's not 20 million you stated, though. It's 10 million I'm owing the company. It is through external confirmation we are going to get that. Then we'll add it as our audit evidence that the company said that they are this Mrs. Florence is owing them 20 million. Whereas when we do our external confirmation, we say the Mrs. Florence confirmed to us that, oh, I'm actually owing them 10 million. So put it in our management letter like that. Our point to raise to the management that your company is lying. They said through our external confirmation, we observed that the company has more than one bank account as against the one they reported in the financial statement. With that, you have already raised your point like that. So they will be battling that. So through external confirmation, you can also use to gather audit evidence, the calculation, the figures they give you, compare it whether it corresponds with the general ledger, whether it's the general ledger figures agree with what? With the trial balance. We confirm, add it together. The performance, do the process again. If they said ABC, is what give them ABCD. Confirm the process again. We perform it for you to know whether it's going to give you the same what? The same answer. Analytical procedure is by setting a standard review on how to gather your audit evidence. The meaning of analytical procedure is way by way at which you answer those questions that will also be an hint or that will also serve as your evidence on which you are going to base your opinion. So these are the general procedure for generating audit evidence. Any question? No question. Are you enjoying the class? Yes. Can I proceed? Yes. Please let me see your hands. Thank you. So let's proceed. Now, audit sampling, sample size, and sample method. ISA 530 talk about audit sampling. Audit sampling has to do with the way in which we select some transaction for audit purposes to serve as our audit evidence. Audit sampling. Now, in a transaction, when they give you ledgers now, when they give you ledger in a transaction and they said the sampling, okay, you have to choose the sample that, oh, out of these 10 transactions, I pick 6. So that 6 will serve as your audit sampling. That 6 will serve as your audit sampling. Then also sampling size. What are the size of these 6 transactions that I pick? Did they actually meet my performance materiality? That is, can it meet up to 80% of the total amount in that ledger? Does it meet 70% of total amount in that ledger that can form my performance materiality? That is aspect of sample size. And the method you are going to use choose your sample is, maybe you have in that particular ledger you have about 10 transactions. Most of the transactions are 10,000, 20,000, 10,000, 20,000. Then you now see a transaction that is 500,000, 1 million naira. So the method to choose is that 1 million naira and 500,000 naira will be your method of sample size, and you are also going to pick them as audit sample. So then the ISA that talks about that is ISA 530, which has to do with the audit sampling, the sample size, and sample method. The audit sampling is the one that I pick for me to check, or for me to ask them to provide evidence on, is what we call audit sampling. The sample size might be to the due to the amount of that transaction. You now put size that, oh, this one now, maybe this transaction that is 5 million, I pick it as my sample size. Transaction that is 10 million, I pick it as my sample size. The method is the volume of that transaction. Maybe as that transaction carry weight, when you are seeing transaction of 10,000 naira, 5,000, all of a sudden you just see invoice, pay 500,000, 1 million naira. So that one is a method that you can use. You said my voice is breaking. Please, can anybody hear me very well? If my voice is breaking, probably it's from your side. Okay, so it's from your side. Okay, so now that is audit sampling, sample size, and sample method. And the ISA that talks about it is ISA 530. Now, analytical procedure, we have explained it before. The analytical procedure has to do with the comprehensive testing of transaction and comparing the figures from last year transaction and this year transaction. So that analytical procedure has to do with the proper way you ask a question and you follow the procedure, step-by-step procedure through substantive testing by check the transaction if the transaction is actually happened in that financial year you are auditing, if the transaction is accurate when you do a calculation, if the transaction is accurate, if it is complete, that is, they did not break 2020 transaction to 2024 transaction. So that is an analytical procedure. And the standard that talks about analytical procedure. So analytical procedure can be that procedure you put in place as an auditor that will serve as that will be appropriate and sufficient for your audit evidence. That is, that's to do with true substantive testing. So analytical procedure can be a substantive testing you put in place that will enable you to gather sufficient and appropriate audit evidence. A special way, method, through substantive testing you put together that will serve as your audit evidence is what we call analytical procedure. And the ISA that talks about it is ISA 520. Now, audit documentation. What do we mean by audit documentation? All those evidence we gathered, how do we document it? How do we put it down? This aspect is stylishly talking about our audit working paper. The audit working paper is that evidence that we gather, the way we document it, the way we put it down for reference purpose is what we call the documentation. Now, all those evidences now, you put it together, you use it to form opinion, and you put it in your office. So next year account now, if you are not there, another person can access the file in your office and see that, oh, this is the evidence that Mr. Edis gathered last year on this particular client. And this one will also help me to gather the same or similar evidence on this current year account. So now, the audit documentation is the proper way we document our evidences to serve as our working paper and also to serve as future reference on the future reference for the people that will be auditing the financial statement in the years to come. So type of this audit documentation or audit working paper. Yes, and the permanent file is the file that will talk about the statutory requirement, the statutory document of an organization, which has to do with their CAC. When you see statutory document of an organization like CAC document, the memorandum of association, the articles of association, those are the and they also serve as your audit evidence. To make sure that are they actually PIE, that is public interest entity. So those are the information that you are going to file in your permanent file for that company in your own office. Now, current file. Current file is also type of audit documentation that is used to record the current year evidence that will serve as current file in your office. So that people that want to talk about it, people that want to check the account next year can easily go to that current year file and see, okay, these are the evidence they gathered last year on this particular account. Okay, that will be as guide to you, the new person that wants to audit the company, so as to have seamless and have idea of what you are going to meet on the what on the field when you get to documenting our evidences is what we call audit documentation. The ISA that talk about it is ISA 230. Now, going forward again, some specific consideration. The reason why I did not put the consideration is that they are in our summarized note. I just have to talk about it that, oh, these are the aspects that you also need to, that we need to talk about, or the aspect that you also need to read when you want to read for selecting items, as audit evidence. So one of these consideration, let me see. Please, can you hear me? Some people are saying my this thing is breaking. Oh, please, can you hear me? Let me see your. When we are not in primary school, some people are still doing that. Is it okay now? Please, can you hear me now? Is it still breaking? But some people are giving me thumb up now that they can hear me. It means probably it's your network. So if you can't hear me, it means it's your network. Because absolutely, more than 80% yes, they said they can hear me. Some are still saying the network is still breaking. So if it is breaking and some people say they can hear me, it means that it's your network that is breaking. So you need to log out and log in again. As simple as that. Please, I don't appreciate this thumb down. It's actually giving me a headache. It's just telling me as if I don't know what I'm doing or I've been saying rubbish since. Yes, if you have to say that, you type here that you cannot hear me, I will pick it up. Not that you are giving me thumb down. I don't know if you used to watch wrestling. If you are giving someone thumb down, it means that that person is an hypocrite or I don't know how to judge. It's just I'm not just cool with that kind of emoji. Please. Okay, it's fine. My people say I should ignore, so I'll just ignore. We did here together. Okay, let's proceed. Let's proceed. So I said, what am I even saying? I said there are some specific consideration for selecting an items. So I want to try and remember one of the consideration, so that I can use it to explain. So according to ISA 501, specific consideration for choosing an audit evidence. Let me think. Okay. So specific consideration. Okay. Talk about written representation here. Okay, I'm trying to check this specific consideration here. I can use it to explain. Okay. Okay, so now I get it now. So specific consideration for selecting item. One of the consideration, we have to consider the risk of material misstatement, that material that we want to check and we want to pick as our audit evidence. What is the risk of that material misstatement and how it's going to have effect on the financial statement? Although it's however in our note. So I only put it here just to tell us that there's also some specific consideration we need to for selecting an audit evidence. So that's why I said we have to check the risk of material misstatement. Then we have to also assess the internal control and compliance on it. We have to check if the transaction will not have effect on our opinion. Then we have to check the quality and quantity of that evidence before we can select if it's not going to affect the opinion that we are going to make on the financial statement of that particular organization. So on that is according to ISA 501. Now, initial audit engagement, that is the opening balances, as I said, that we need to check our opening balances to initial audit engagement. One of the things we check as our audit evidence is initial audit engagement, that is the opening balances. You know that the closing balance of last year will be the opening balance of this year. So in a situation whereby the closing balance last year is 1,300,000, then instead of that 1,300,000 to be reported as opening balance this year, they now report 1,290,000, which each sort of 10 naira. So then this one is telling us that according to ISA 510, we have to do initial audit engagement on the opening balances of transaction we are seeing in the financial statement, if the balances are actually what correct. Then again, the custody and confidentiality of audit working paper and the type. I've explained this before. The custody and confidentiality, that is, who is responsible to keep the audit paper. That is, the audit paper should be kept in the office, in the cabinet, or safe in the office of what? Of the auditors, for easy reference. And the audit working paper must not be what? Put in a place where the confidentiality of the client is going to be what? To be seen by the third party. So the type of audit paper I've explained, we say we have a current file and a permanent file. I've explained before. Then that is that about the custody and confidentiality of audit paper. Then again, the accounting estimate, including the fair value accounting estimate and related disclosure. If you remember the first class of our revision class, we treated this question according to ISA 540. So the audit of accounting estimate, how do we ensure that the actual estimate that was that they closed with last year was the same balance that they opened with this year? Then which include the fair value accounting, that is the worth of that asset as at now. Then related disclosure, that is any related party that associated with that transaction should be disclosed and also to be part of our audit evidence. So this one has to talk about the ITA 540. Then the other one is written representation and its content. What is written representation? Written representation also serve as our audit evidence, because this is how written representation works. It is the letter from the management of the company to the auditors stating that they have supplied all the necessary documents needed by the auditor in order to do their audit exercise. Written documentation is a letter sent by the management of the company to the auditor, stating that all the necessary documents requested for by the auditor for their audit purpose has been supplied to the auditors. So that one is also our audit evidence. When you give me written representation that you've given me everything, and I'm still asking for some documents to serve as my audit evidence, and you did not give me, that written representation will be as my audit evidence, so that if anything goes wrong, I'll have something to show that, oh, I asked for 13 transactions, you gave me 10, and you are giving me a written representation that, oh, all the 13 transactions I asked from you has been supplied. So written representation is also part of our audit evidence, and the aspect that talks about it is ISA 580, and its content, you can see it in the summarized note. Now, external auditor relies on the work of internal auditor. It's also part of audit evidence. If you want to gather audit evidence, and how can external auditor relies on the work of internal auditor? If the internal auditor is a sound practitioner and the auditor is well behaved and it have skills, skill care and skills, then external auditor can rely on the work on that particular internal auditor. So the standard that talks about it is ISA system. That is, how can we, in what way? So they ask you in a question that according to ISA system, in what way can external auditor rely on the work of internal auditor when the auditor is a good practitioner, or when the auditor is independent of the management, when the auditor is not biased in his opinion, when the auditor is not influenced by the decision of the management. So that is where you can rely on the work of that internal auditor, because you know that any evidence that the internal auditor will give you will be relied upon, because it is not under influence of any management decision. So again, external auditor using work of external auditor's expert, that is where an expert is presented by the management to give us an information. To what extent we as the external auditor can rely on the information given to us by that expert. The expert that also talk about it is ISA 620. So there are some conditions that will also be met before we auditors, external auditor, can place reliance on the work of experts by the management. So the same thing can also goes with the one I explained, whereby the expert is independent of the management, is not influenced by the management decision. It can make a decision on its own without objectively, without being biased and being without being biased on his decision. So I think this system and 620 goes along with each other. It's only that one is internal auditor, one is expert auditor. Then again, let's proceed. So that is that about the audit evidence generally. So please, let me entertain question here just for some minutes. Question, please. Question. Just for 5 minutes. If you have a question, please raise up your hand. Let me quickly attend the question and move on. 5 minutes, please. Okay, Mr. Benjamin, please go on.
Yeah, sorry, please, I'm dragging you back. Please, I just want to get the clear-cut difference between the current working file and the permanent one. Sorry about that, please.
Okay, no problem. The current file now. All this evidence we gather that, this out of, under expenses, maybe repair and maintenance, it's office expenses, repair and maintenance, office supply, maybe according to ledger, is the total amount is 5 million. So you ask for audit evidence that will make it, the audit evidence, at least 70% of that 5 million should be checked as your evidence, Abi. So once they give you those documents, you as an auditor, if they give you soft copy, you download the soft copy and name it as one of the evidence for what? For repair and maintenance that you ask for. But if they give you hard copy, as an auditor, you sign on it, that is maybe the name of your company, EY, you write EY, then you write the date and you circle it. Then you take a picture. Once you take a picture, you scan it, then you put it, you attach it with that ledger, that is when you are when you want to check, when your guy want to review, and he said, okay, under this repair and maintenance, what are the invoices you ask for to serve as your supportive document? You just show it to them. So that one you show to them, you show to you attach to that your office supplies or repair and maintenance, as the case may be, for your guy to review. So that thing, you print it out. If you can't print it out, for us now that we are using software, computer software, so we import that evidence and our working paper on the all the software. So when my guy want to review, once you just click that office supplies, you will see the evidence I used to substantiate the figure there too. So that evidence can serve as purpose for another person to use next year. So the person now going to use it that, okay, last year they used this, they pick all this audit evidence for office supply. So that one, it will be like starting point for the new auditor. The auditor cannot use that reference this year again, but it will serve as reference, and it will also be a guide to the new person that want to take over the client, for the person to know the exact thing is going to ask. So current file is the file for the current year evidence that they cannot use for next year, but however, it can serve as guidance or guideline to the person that's going to audit the account next year. That is that about the current file. Do you understand that one? Hello, sir. Do you understand that one? Okay. Now,
Yes,
the
sir.
other one, which has to do with the permanent file, it is the company statutory document. That is the document that the company they can only collect it once. Their CAC, their memorandum of association, article of association will be kept in a file, and those are the same we call permanent file. At least by next year, you cannot say that the company should go and get another CAC. They should go and bring another memorandum of association and articles of association. That one they collected can serve for a very long time. That is what we call what? Permanent file. Do you understand that one, sir?
Yes, sir.
Do you
Thank you very
understand,
much.
sir? So that is that about that. So which other person? Mrs. Blessing, please, your question quickly. Quickly. This is to 11.
Sir, please, I would like you to, sir, please throw more light on all the documentation and the analytical procedure, please. Yeah, the line was breaking. That is why I didn't understand.
Audit documentation is the way we document our evidences, the way we put them together to form as our evidence. Now, you requested for this particular receipt or invoice to be supplied to you in order for you to check if the transaction is actually accurate, right? That is evidence. So the way you now document is like the way I said that if they give you an hard copy, you snap and keep it and name it as folder, maybe invoices for what? For office rent. That is document. You have documented it like that, and it will be your working paper. So that is that about audit documentation. The way you document your evidences that will serve as references later when your account is being reviewed by your manager is what we call audit documentation. Now, analytical procedure, it is step by step you use as an auditor to gather an evidences to show that the transaction for that particular period is accurate, is complete, there's cutoff, and it is valuable. That is what we call an analytical procedure. That analytical procedure is sometimes called substantive testing. That is a thorough review of transaction to gather evidence so as to form your opinion whether the financial statement is of true and fair view. That is what we call an analytical procedure. You can see the difference between the two. Do you understand now?
Yes, sir. Thank you.
Do you understand? Because that your yes, sir, is like, let me just leave him, Gary. Do you understand, ma?
Yes, sir. Thank you.
Okay. Because that your yes, sir, is just like, oh, let me just leave him, Gary. It's like the guy is tired. I'm still here to explain. That is why. But it is for me to tire, Sha. So let's proceed. So any other question? No question. Can I proceed? Yes. Do you understand? Yes. Okay. Who is this saying? Please explain that current file and permanent file. How many times did I want to explain? Do you mean that you don't see get it? If you don't understand, let me know. Current file is the current audit evidence that we cannot use next year, but it can serve as reference for the next auditor that is going to come on board. Like I said, I pick office rent now this year. I asked for supporting documents and I documented it as my audit documentation. That is my current file. That is, it will be the evidence I gathered for that particular year of audit, for that particular financial year. It cannot be used next year. That is what we call current file. What's wrong? This my system has gone off. This one has gone off. The other one I just paid, this one is going to take me. So I'm not sure I'll be able to share my screen again because the other laptop I'm using to share my screen has gone off. I don't know what we are going to do about that. Hello, can anybody hear me?
Yes, sir. Sir, maybe you should use your phone. You can use your phone, sir. You can use your phone, sir. Let's finish this thing once and for all. We are here for audits
Also,
today.
you can share the material on the WhatsApp group chat.
Yes, better still you can share the material. Somebody can help you.
I will still share if I share the material now. You guys will not allow me to enjoy my class. So let me just join the class. share my screen and see. Let me even see if I've downloaded the material. Let me check. Where's my mail? This is one of the problem now. Let me see. Snap I should bring light though. So I want to download it now. Just give me some minutes while the thing is downloading. Okay, so let me quickly download it now. Okay, so let me see now if I can join the class. Yeah. Please, just bear with me. I hope you can hear me. Don't worry, I'll try as much as possible by so far this laptop. Just pray that they bring light because this one now is how many percent now? It's just about 35%. So let's see. Join the class and so I've joined the class back. Let me see if I can use this one to share my screen. Okay. So I don't even bring the option if I can share file now. While I do. Choose. Okay, let me just share this thing in the group chat so that please, who is using laptop here? Who is using laptop here? Please, who is using laptop to join this class?
Using laptop, sir. I'm using the laptop.
Mr. Sam, please. I'm
Yes,
going to send
yes,
it
sir.
this into the group now so that I can pick
Okay,
and help us to share your screen.
okay. All right, sir.
Yeah, let me forward this into the group chat. Right. Document from files.
If he's not a co-host, can he share his screen?
I'll make him co-host. So I've sent it to the group chat. Let me see if I can make you co-host. My concern is this thing should not just go up. That's my main concern now. They should bring light. If not, Okay. So you can share your screen now. Have you, Mr. Sam, are you there? So anybody can share the screen now. Mr. Sam, are you there?
I'm here. I'm here. I can't share the screen yet, too.
Yes, now.
He's saying not allowed to share.
Uh,
Kindly confirm again.
I've
Saying you are not
already
allowed to share your screen.
okay. I've already put it on now. Check again.
Okay. Still the same thing, no. Ask if any other person can share the screen. It's still
You
showing
can
the
send
same.
it to me. Let me try if I can share.
I've put it in the group chat.
All right.
I put it in the group chat.
It's saying you are not allowed to share your screen.
I don't know. It's access. Let me see. And Kabir told me this, how to do post, no video, send chat, post management.
You will need to turn on the sharing screen so that whoever that want to share can share.
And that is on now. Share that screen is on. Send chat is also on.
It's off. It's not on. It's off.
It's on here now. At least now, everything when I turn the speaker on, at least I can hear you. Can be able to talk. It's the same thing that I followed there. I don't want to know.
Yes, I send the material to the group now. Let's use it.
I have sent the material. How many times do I want to say it? I have sent the material to the group.
Where the WhatsApp group you have sent it.
So let's use it.
The material is in the group already.
Let's
If
start.
it is on the group, maybe we should continue because
Yes,
this one we
let's
are going
continue.
further
We'll just
back.
open the group and that's all.
Well, he's saying we are not allowed to share it. It's from your end, sir.
No problem. Let's continue.
Open the material from your end.
You can open it from your end and let's continue with the class. So let's continue with the class so that at least it will not be like we are delaying ourselves. So where do we stop? I think we stop at chapter 8 now. Chapter 8. So I've explained the meaning of chapter. Okay. Chapter 8. I've explained chapter 8 now and we have talked about everything in chapter 8. Then we now want to move to chapter 9. I think some people are actually, let me meet everybody back so that it will not be like they are disturbing class now. Where is it done? Okay. Let me in the confirm here.